Welcome to The Explainer. Today, we're going to break down a huge economic trend that's happening right under our noses, the debasement trade. We're going to explore why some of the world's biggest financial players are making a massive move into gold and what that might mean for the actual money in your pocket. All right, let's jump in.
So let's kick things off with a question that really gets to the heart of it all. And it's probably something you feel every single time you go shopping or look at your bills. Does it feel like your money just doesn't stretch as far as it used to? Like the dollars you've worked hard to save are, well, quietly losing their punch?
Well, guess what? It is not just in your head. The world's central banks, the massive institutions that manage entire national currencies, they're making a very deliberate and very, very big move. They are hoarding gold. So in this explainer, we're going to unpack the big why behind this incredible historic shift.
Okay, to really get what they're doing, we gotta wrap our heads around this key idea. It's a term you might start hearing more and more: currency debasement. Now, it sounds super technical, I know, but all it really means is that slow, almost invisible erosion of what your money can actually buy.
And you've definitely felt this yourself, right? Just think about what a $20 bill could buy you, say, back in 1990, versus what it gets you today. I mean, what used to fill up an entire grocery cart might now barely cover a few essentials. And it's not because the milk and eggs got fancier, it's because the dollar itself buys less stuff.
And that right there is the textbook definition of what's going on. Currency debasement happens when the supply of money goes up, which then pushes down the value or the purchasing power of every single dollar. A great way to think about it is like you have a pitcher of really good juice, but you just keep adding more and more water to it. Sure, you have more liquid, but every single glass is just a little bit weaker, a little less potent. So that brings us full circle, right back to the central banks. They are looking at this potential for their currencies to get watered down, and they see it as a major, major risk. So what's their move? They're looking for a hedge, a way to protect their value from that erosion. And that has kicked off what's basically a modern-day gold rush.
This quote just nails the whole mindset. When faith in paper money gets a little shaky, these giant institutions start looking for an anchor, something solid. And for literally thousands of years, that anchor has been gold. And why gold? Well, it's simple. You can't just hit print on a gold bar. Its supply is limited, and that makes it really attractive when other currencies are, being created out of thin air.
And get this, we're not talking about a small tweak here. The scale is just mind-blowing. Over 1,000 tons of gold bought up by central banks in just the last year. That's a record. It's a huge signal that there's a major strategic shift happening away from just holding currencies and toward owning a real, tangible asset. All right, so that begs the big question, right? If the biggest financial players on the field are buying up gold, how can an average person even think about participating? Well, thankfully, the options today go way beyond just, buying a treasure chest. Let's take a look at the modern investor's toolkit. So you've actually got a bunch of ways to approach this. There's the classic old school route, owning the actual physical metal. We're talking coins or bars. Then you've got modern financial tools, like ETFs, which basically just track the price of gold. We're even in an age of gold-backed crypto now, which tries to give you the best of both worlds. And of course, you can always invest in the companies that are literally pulling the gold out of the ground. Look, the bottom line is there's no magic bullet here. It's all about trade-offs. With physical gold, it's yours. It's a real, tangible thing you can hold. But you've got to figure out where to keep it safe. With something digital, like an ETF, it's super easy to buy and sell with a click of a button, but you don't actually own the gold itself, you own a piece of paper that says you do. So it's really a choice between direct physical ownership and straight-up convenience. At the end of the day, understanding all this, what debasement is, what the central banks are up to, and the different ways you can get exposure to gold, it's all about empowering you. It's about giving you the information you need to navigate this tricky financial world for yourself. Okay, let's do a quick recap of what we've covered. First, currency debasement can eat away at your savings over time. Second, the world's central banks are reacting to this by buying gold like never before. Third, there are a whole bunch of ways to get into gold, from physical bars to digital tokens. And finally, every single one of those methods comes with its own list of pros and cons. The idea here isn't to tell you what to do, but to give you the context so you can make your own smart choices. And that really leaves us with one final and kind of personal question to think about. As the global economy and the very idea of money keep on changing, the question really becomes, in a world of uncertainty, what are you going